Welcome all. I think we're nearly ready to go. So thank you for attending our second webinar session, showcasing a fantastic new program that we're implementing into our business called Figured. My name is Ben Abbott and I'm the Senior Accountant here in the Bordertown office. And the session today is going to focus predominantly around livestock. But it also has the ability to handle crops and other tracking items as we go along, grapes, etc. Today's session is very much an introduction and hopefully will highlight some of the benefits and uses the program offers to you. Examples with some strong farm management reporting, cash flow budgeting, and even helping with succession plans for future succession of the business. We're lucky enough to have today with us a Figured representative, Jimmy, and he's going to talk through some of the key metrics around the Figured software. So over to you, Jimmy. You're on mute, Jimmy.
There we go. Just a couple of things first on the Zoom stuff. So we've disabled the chat for today's session, but down the bottom we'll should have some time at the end for questions. So during that we can raise hands and unmute if you want to have a yarn. Alternatively, if you drop your questions into the Q&A panel throughout the session, we can answer them and then get back to you or follow up later on if we need. Ben, did you want to give a bit of a rundown around the team? On mute, mate. On mute, Ben. Sorry.
Okay, take 2, 3 even. Sorry, the button on my remote must have gone flat. Most of you are current existing clients of Murray Nankivell, and you know we have our major offices in Murray Bridge, Narracor and here in Bordertown, but we also visit 11 other sites around the state. Obviously, you're with us to do your tax work, and we proactively, and hence why we're here today working with Figured, we proactively and innovatively help and assist our clients with their business, maximise their profits, minimise their tax and improve their overall bottom line. As it says there, our goal is to be your client's most valued advisor, and with our transferring towards a cloud-based system, we've integrated ourselves with Xero and Figured, and I'll probably get Jimmy just to talk about that integration between those two products. Thanks, Jimmy.
Cheers, mate. Yeah, Xero's a pretty important precursor of Figured. So Xero is cloud-based accounting software. A lot of talk around these at the moment. There are a few on the market, but Figured made a pretty active decision many years ago when we founded 6 years ago to kind of pick a winner and back it. Originally from New Zealand, as we are as well, Xero's grown quite heavily. So it's a really important underpinning of the Figured application, gives the real strength behind us. We wouldn't be what we are without them. So we'll just touch on Xero at the start briefly, then have a look at the farm management and the budgeting work on top of that, and then we'll circle back to questions at the end. So cloud-based accounting, a lot of talk about it, like I said, and a lot of information, some misinformation out there. The core stuff is that it's always online, so it's quite different to some of the hybrid cloud things or desktop based, where both Xero and Figured run in a browser, so they're always online, they're always accessible. real key aspect of it is that it's multiple users. So both applications have 0 limits on the number of users that you can invite, and those users can have different roles as well. Really centered around collaboration with something like Xero. That's collaboration with accountants and bookkeepers and family members and stuff like that around the bookkeeping and accounting function. And with with Figured, it's again a collaboration around the planning and the farm management. Incredibly secure applications. All the data is encrypted and stored in multiple geographic locations, so no risk of ever being lost and no need to back up or anything like that. And then final thing really worth mentioning is the multi-device support. So Xero does this a little bit more than Figured needs to realistically, but obviously accessible in a browser, which means you can run it on any computer, but then also there's native apps available on iPads and phones. So we regularly get feedback from Xero users that they're reconciling their bank, picking up the kids from school, or God forbid, even on holiday and stuff like that. So always accessible and always online, real cornerstone of the applications. Won't go too much into the Xero stuff today. Murray and Ankerville are running some adjacent sessions on the Xero stuff, and certainly you can go back to them for a bit more, but it is worthwhile understanding some of the underpinnings of this to start off with. So bank feeds and reconciliation, really important part of Xero. Xero deals with it like a few other applications do via automatic bank feeds. So it's a direct feed of your bank statement lines into the application. And then it's just a matching process, like you see on the right there, that we have our statement lines coming in and then we match it to a transaction. You can set up rules to automatically code things off. So for those recurring bills, bank fees, phone bills, that kind of stuff, you can set up rules to automatically capture these things and code them off automatically. So drastically reducing the amount of data entry that you need to do. Real big outcome of this is that you are up to date all the time. So rather than saving up a bunch of work for rainy day or end of month, or God forbid end of quarter, instead you can keep on top of this stuff with a couple of transactions every day, like I said, on your phone, on the iPad, something like that. Just keep on top of it, and what that means is that Xero is effectively always up to date and you always know where you stand. Pretty important change legislatively came through last year, which you may be aware of, which is single touch payroll. So many businesses were required to reassess their payroll solutions due to this. Xero is of course single touch payroll compliant. So meaning you can process your payroll, lodge to the ATO on the same day. Manages all of that perfectly as you'd expect, but with some additional bonuses. So leave entitlements, timesheets, employee reimbursement, some of those other niceties, not necessarily always thought about by farming businesses. These can be managed within Xero, but additionally be managed with a phone app called Xero Me, where employees can submit their leave requests, manage timesheets, those kind of stuff, even view their pay slips and those kind of things as well. And there's a fairly comprehensive set of payroll reports in there that you can run off, of course. With all of this efficiency, it makes sense to store as much as you can and move away from paper as much as possible. So Xero really assists with this in a couple of key ways. So they have the ability to email bills direct into Xero, so you can file them away. There's also a Xero file section, which is quite useful just for storing business documents. So quite often we'll see users creating effectively an online filing cabinet for contracts, legal docs, and just the stuff that you're required to keep on hand, bank statements, those substantiation that you need to keep handy for tax time. So rather than a shoebox or a filing cabinet or a big folder or something like that, you've got the same thing in the cloud, which is always accessible and always accessible to everyone that has access to the file as well, with some obviously some security provisions in place if you don't want them to have access. But importantly, if the team at Murray and Ankerville need to query something, then they've got access to the same docs that you do. There's enhancement above that, which is HubDoc, which does actually add on some automated data entry of that for selected bills. There has been other sessions that Murray and Ankerville have held on that one in the past, so there'll be a bit more information about that. And then it comes to us. So we've been around for 6 years, as I said, and follow Xero around the world to a fair few markets with them now. We are the farming add-on for Xero and firmly embedded in that way. We, like I said, we only integrate with Xero, recognising that they are the industry leaders in this sense, and have been heralded by Xero in that sense over a few key things. Focus of today's session for Figured, we're really going to look at what is probably our most common, I'd say, competitor in the market, but realistically it's the most commonly picked up solution for a lot of people, and that's spreadsheets. Spreadsheets, while being enormously customizable, they often aren't very controlled, and they are, when we see them, quite error prone. So all you need is a couple of numbers in the right place or a formula a little bit askew, and you can end up with some pretty kooky numbers that you might not otherwise pick up. Figured does look and feel a bit like a spreadsheet in parts, but there's a lot of controls that are built into that. We center that around what we call the rolling plan. So I'll take you through that now. So starting off in the vein of the spreadsheets, we'll bring up what we call our planning grid. I'm just going to simplify this down a little bit. Up the top, the first thing I'll draw your attention to is what we call our global date selector. And this is a pretty important central focal point of Figured, because it does control a lot of the data that you see on screen. The first thing you'll note is that we're viewing the 2021 year, and at the moment we've got this set from July to June. So most livestock farmers we deal with will budget on a financial year. That said, it doesn't have to be the case. So you can, if you choose, edit the planning year, as we call it in Figured, to align with your production year if that suits your business. So not uncommon for us to see some livestock producers running on a calendar year, and certainly, as Ben mentioned, we do cropping and some grapes and dairy as well. So we'll see people running on March to February or April to March years as well. Quite flexible there. Really great outcome of that is that you can align. You can still get all your financial reports and all that kind of stuff out of the financial year out of Xero, but in Figured, you're really aligning the reporting in here to be your production year, so you can understand your production year profit. The second thing you'll notice is what we call the mode selector in the middle. So we operate in two modes in Figured. One is actuals, which is just looking at data, sync data with Xero, and then we can obviously add the farming reporting elements to that. The second of which is our actuals plus forecast. What this mode gives us is a really strong way of budgeting, which is underpinned by the good quality data that we receive from Xero. So because Xero is always up to date, we have actuals effectively as at now, or as at yesterday, or at worst as at last month. And then we can forecast or budget from there. So it means we're starting from a good solid point and going from there. We're also always building out our budgets in line with how we record our actuals in Xero. So we're using the same chart of accounts, the same methods, the same transactional structure. We inherit a lot of that from Xero. The last one is our actual selector. And what this does is effectively change what we're viewing. So how much of what we're seeing is actuals versus forecast. So in this example, I've got actuals to last month. So I'm looking at 4 months worth of actuals up until, sorry, actuals to this month till the end of October. Might drop it back a month. It's a bit tidier. So up until the end of the September quarter is there, and then we've got the remainder 9 months worth of actuals there. If we had no actuals, we could simply change that to be actuals to none. And then what we're doing is we're looking at our full year plan. When we talk about our plan in Figured, we've got our kind of farming specific detail at the top, which we'll circle back to at the end. But the rest of it does behave like a big spreadsheet. So we can click in a field and we can copy that amount across, or we can take an amount and we can spread it out annually, monthly, quarterly, something like that. We can increase it by a percentage. And if we wanted to as well, underneath this, we can get into quite granular forecasting where we can put individual quantities and notes and assumptions against individual amounts. Very useful for planning capital expenditure, repairs and maintenance, those kind of larger ticket items that can sometimes get away from people a little bit. All of our reports are structured under some quite strong parent categories, so you do get a bit of granularity to your reporting, and all of these can be zipped up nicely as well. Then we break down into our non-operating expenses, so we can classify things like interest and taxation to be non-operating, so that we can see what's the true business versus what are our finance costs, those kind of things. And then we have our non-operating movements. So these are cash movements to balance sheet accounts, typically drawings and equipment finance and those kind of things that can go in here as well. If I change my date selector back to be last month.
Jimmy, can we just go back? Sorry, can we just go back to that last down the bottom there where it shows the GST calculation as well? Like that's also probably when most people do a cash flow budget, the GST aspect of their income and expenditure.
Hello. Yeah, sorry, I can't hear that bit. Yeah, exactly right. The GST at the bottom, so just changing those actual selector here, what it's done, you can see we've brought through the actual GST on hand and the actual balance. So this is the GST account from zero. But then as we look forward, we've calculated, based upon the data entry, we've calculated whether the account is taxable or not taxable, and then calculated the GST movements. And then the refunds and payments aligned with the reporting periods, whether it's monthly or quarterly, depending on what you're set up for in Xero. That all comes through there as well. GST is one of those things that is quite often overlooked in most budgeting. So yeah, absolutely very important to focus on as well. The bottom there, we've got our balance coming in from Xero as well. So our bank balance is coming in from Xero. Again, all real time, all synced. We do a couple of innovative things there where we can actually have the ability to aggregate bank accounts. So if you have cash or cash equivalents, so you're commonly using Amex cards or those kind of things to pay for some bills, you can aggregate them into one large effectively bank account. So you're not having to budget for transfers in between those accounts. But you can split accounts off as well to account for movements between bank accounts if you like. We'll circle back to this very soon, but what we want to introduce now is the farming element of Figured, which we call trackers. So trackers, simplistically, you'll have a tracker per enterprise, and you can have multiples for the same type of enterprise. So you can have multiple cattle trackers, if you like, or sheep. Similarly, you can also have grain, milk, a variety of other ones. They really do add that farming element, that granularity and the assumptions behind the budget. So let's have a quick look into them. So this farm, we are just looking at a beef producer today. So we've got 2 beef cattle trackers. Not uncommon to see this kind of setup. So it might be a breeding herd and then a finishing lot that we might just put some trade cattle through as well. As we open up the tracker, similar kind of view, but respecting the date selector up the top. So what we have is our opening quantities on hand as at 1 July. We've got some movements between stock classes, which we call aging there. We've had some sales, and we have a current quantity on hand as at actuals to last month. So that's as at September. And then for the remainder of the year, we have forecast data. So all of these numbers are livestock movements, but behind the scenes, there's actually transactions that underpin all of these. It's a couple of different ways to enter those transactions. So if we look at forecast first, we're going to go into a tool called Reforecaster. It's a nice, simple grid style view to allow us to build a budget, but then also refine a budget as well. So I can simply click in a sale column and a row for a corresponding stock class. And then I'm presented with, for our forecast, presented with the remainder of the year. So I can enter a quantity, a weight, and an amount. My weight can be live or carcass. My amount can be in a total per head or per kilo. And I can put these transactions in. The weight is a really important field, and it's that second layer of granularity that you won't get from a more generic accounting solution like Xero, MYOB, QuickBooks, those kind of things, Reckon. Something that's commonly overlooked and does change your reporting from just being about dollars to being about heads and kilos. So pretty important little thing. You can also see in here, we can budget or forecast for births, purchases, and we can do the transition or the aging between classes as well. So nice tool there to build out a quick budget.
As you mentioned, Jimmy, we don't need to go into that much detail either, do you? Like if you do only have maybe bulls or stud cattle and your trading herd, then you can simplify it down. So maybe don't get scared off by having a 12 to 18 month and 18 to 30 month and thinking you've got to continually transfer, because it doesn't have to be that
exactly right.
depth.
Yeah.
And we can start off actually quite simple and progress it and build it out later, can't you?
For sure, yeah. So in this example, we've got a host of stock classes enabled because we've gone into quite granular tracking on this one. There's a range of stock classes you could choose from. So a lot of people just start with calves or mixed calves, cows and bulls, very simplistic. And then do some transfers between them if they need to. We have even simpler down the bottom here where we could have, say, trade cattle, trade males and trade females if you were just looking at some simplistic tracking. We often find that people will start off simplistic to start off with, and then slowly as they become more au fait with the tools, then they can add the granularity in they need. So fairly configurable about what works for your farm. If we have a look, we can build out our sales in a bit more detail again if we wanted to. So in the previous example, we were just talking about a quantity in a month. We do have quite a transactional approach to it if that's what fits. So if you're just do kind of less frequent, larger sales, then often we find people come to this method, which allows you to enter a sale date, a payment date, certainly still the stock class that you want to sell, quantity, weight, and amount, again in total per kilo or per head. But this has the additional ability to add non-stock lines into the transaction. So we do see a lot of farmers building out their budgets for this kind of stuff, adding in selling commissions, levies, those kind of things in as with direct costs onto their transactions. So they're capturing all of those kind of things as variables. So certainly the ability to increase the level of detail on a couple of those items as you need. For the actuals, when you sell something, we have the ability to enter the invoice into figured. Same kind of form. We're populating the sale date, payment date. Our contact list syncs through from Xero. Still enter our stock class and our non-stock lines like levies, but in here we've got the ability to post the transaction through to Xero and also add an attachment in there as well. So the attachment could be kill sheets, could be the invoice or RCTI, anything like that that you wanted to pass on. So I'll show you one of them that we've done. I go into the view transactions page. Here's one right here. So I'll open this one up. So this is an invoice that has been posted through from Figured. So we're in Xero. You can see that it's come through from Figured. We've got a link back to Figured, so I can click this and it's going to open up the invoice here. And the invoice has sent through an attachment as well. I've just got a picture on mine, but you can attach whatever you like. Doesn't matter what file type or anything like that. It'll all just come in here. So that attachment's actually come through from Figured, deposited in Xero. So you've got, you know, all the source documents set nice and tightly with your financial transactions as well.
And that's a handy tool, obviously, because it's not like you have to double enter it. It just gets automatically transferred back over into Xero. So when the money then appears in your bank statement, you'll have an item there to match against. You know that the data's entered in correctly because it was entered in through the Figured program. And that's one of those jobs that you can tick off in the car on the way to Adelaide because you know the information's already matched up. So you just tick OK.
Exactly, yeah. So when your when 237 odd thousand hits the bank account, that'll come up as your bank feed. This invoice will pop up as a suggestion in Xero, and then it's just a matter of matching them off and they're reconciled. So it's pretty minimal touch. So if we jump back into the planning grid post this, we can see a couple of things. So I might shift forward a month because that's when that invoice was. Not paid. But so we can see our those forecast movements that we had for the remainder of the year are populating up the top. You'll notice that these cells here are not editable, whereas these ones, for example, down here are, or in the rest of the grid are. It's really because what we want to try and do is we want to capture the assumptions behind that. So more than just saying, I'm going to sell $240,000 worth of beef in December, we want to know the head, we want to know the kilo, we want to know the stock type, we want that little bit of extra information. In return, provide a little bit of granularity to the reporting. So all of these numbers flowing through from the tracker. You can see I've also got some livestock selling expenses. So in this case, we've categorized some accounts back to the tracker so you can drive gross margin budgeting from the planning grid. So you can nominate accounts and link them back to the tracker in here if you like, so you can get a good idea about your gross margin. But the budget's built out with some solid underpinnings underneath it. We do have the ability, Figured is a three-way planning tool as well, which means we don't just do cash flow planning, we do P&L and balance sheet as well. So if I click over to my profit tab in here, we've also got the ability to see the invoices in here that are, they might have been sent through to Xero, they might be unpaid as yet. And then on the profit tab, we can also drive some management valuations of livestock as well if you choose to value your livestock on market basis. So pretty powerful tool as well.
And that there's a benefit, obviously, in that, Jimmy, when you come to do some tax planning, whether it be at the end of March or something or other, and we've got this tool, we've already got all the actuals in there, and then you can work out whether you're going to sell that herd or that sale in June, or whether you want to hang off, and you can make some really quick, informative decisions without having to spend maybe too much time, because all the data is already there. So it's a very handy tool.
Yeah, precisely. The tax planning conversations are a lot easier from the feedback we get from when users are on Figured, because we've got a robust forecast that's got the assumptions behind it. We know that the actuals are up to date, and very easily we can edit the transactions, so we can look and say, this $241,000 in May. Do we think that's going to happen? When do we think it's going to be paid for it? We can go and find that transaction. We can just simply adjust the dates. So if that might slip till June or even July, we can change the dates on it, press save, and it will actually update in our cash flow as well. So the timing of cash flows in farm forecasting is, perhaps the most critical thing. It doesn't take much for a couple of expenses to come forward, a couple of sales to go a bit late. And we do very commonly hear of farmers ending up in a bit of a cash flow shortfall quite quickly. So with our budget populated in here, like any planning application, a really important thing of it is tracking how we're performing against that budget, and then the ongoing management of that. In Figured, we've got a pretty unique concept for doing that, which we call snapshots. So the general workflow is that we would start the budget blank. We've populated it in. We've got some nice tools to do that as well, so it doesn't require you to just key everything. You can import things in. We've got some quick tools to copy from last year's budget or even last year's actuals and just bring them in, and then you can tweak them. So building the budget's not overly challenging. Where we do want you to really spend a bit of time is making sure the production budget is pretty solid. So spend the time there, and then use some of our tools to kind of bring in some quick calculations from previous years into the rest of it. Once we're pretty happy with where we've got, what we do is we take the snapshot. So we're going to call this budget final version. We have our actuals to date here, which is a really important feature. What this does, this sets our opening balance for what comes through from zero. So opening balance for bank, opening balance for GST, opening balance for the rest of our balance sheet, and also opening balance for our cattle on hand. So what's our reconciled actuals there. We can give it a description if we want. So we can say worked on with Orinoco, and then we can set this as our annual plan and take a snapshot. What that does is it goes back and stores a full copy of every single setting, transaction, cattle number, stock number, anything that might impact this plan. Saves a copy of that in the background, and you can take as many of these as you like. So we have a little menu that manages them in here. I think we have a few of them in here. So we've got a few different snapshots that have been taken in the past over there. So these are just, they're read-only copies of the plan. Now that we've done that, this is the plan. This is still our working plan. So as we march through the year, we might update this to be, say, actuals to last month. So we're meeting with the Marinangful team. We've updated some things. We've changed the forecast slightly. We've revised our, revised our cattle numbers. We've updated, due to beef price changes or anything like that, or timing of sales. We can then take another snapshot. We can call this our September reforecast. Our actuals now are to September 2020. We don't need to give it a description, and we're not going to set this as our annual plan. So we're going to keep this as just another comparison point. Good habit to get into. It just basically saves all of those assumptions again. The annual plan does a couple of things for us. The dashboard, which is your landing page for Figured, will give you a good indication about how you're tracking. So once we've got a snapshot set, we can see a couple of different things. So the black line is denoting what we're actually doing based upon our actuals and our forecast. Our forecast is the plan we're always working on. The blue line denotes what we have set as our annual plan. So this is effectively our locked budget that we're shooting towards. and we'll see what's happening with the cash balance over time with those stuff. So we're actually tracking substantially below with a cash balance about where we thought we were going to be right now. And is that something that we're prepared for? Down the bottom here, we've also got a waterfall graph which will take us through good and bad deviations from that plan. So in our plan, we're looking at a net profit of nearly $1 million, not 950. Beef cattle income substantially below that, so orange is deviations away, green is deviation towards that. So now we're tracking at an actual plus forecast profit of 185. So all the while, as the data is flowing in from Xero, not only are we able to see how we're tracking, but we're always comparing where we are now versus where we thought we would be now, and then where we're going to land at the end of this year versus where we thought we were going to land. Key report on that front is our variance report. So, like I said, kind of major reason why most people would run this kind of stuff, rather than just doing a budget and sticking it in your top drawer. Very important to come back and reassess. So we will have the ability to run variance on both P&L and cash flow. So if we look at a cash flow variance report, we've got some additional options under there about what we want to compare as well. So we can compare our actuals versus our forecast being the working plan that we've got going, or we can compare our actuals versus our snapshot, which is the saved copy of the plan, the saved budget. If we tick that one, it'll by default, it'll choose the annual plan, which is the official one that we've set. But we could compare it to, say, the September reforecast if we liked as well. So lots of different ways that we can compare things this year versus last year, year to date versus forecast versus snapshot, that kind of stuff as well. So lots of information there.
Jimmy, we just might take a moment. I've just opened up a question. Can you use Figured on your phone?
Figured is a mobile responsive website. So there's no phone app. I have used Figured from my phone to check a couple of things and answer a few kind of urgent customer queries. Not really recommended. So what it is, it's a responsive application. So there's no phone app for it. It's not really built for that. Generally, the way Figured works in terms of the normal reporting cadence, the best way to think about it is you work on Xero throughout the year, or say, let's say, work on Xero throughout the month, entering the data, coding things off, reconciling your bank account. For a couple of those transactions, sell livestock, sell grain, those kind of things, rather than entering them into Xero, you're going to come to Figured instead. Enter those in, they'll push through from Xero and you're reconciling. Entering an invoice, attaching documents, those kind of things, definitely want to do that from a computer on Figured. Then what you're going to do is you're going to open up Figured and you're going to run off these kind of reports. And a variance report like this, or if you can imagine, let's pull up a cash flow report. Awful lot of data on a page like this, lots of columns. So viewing on a phone, probably not really what it's designed for. So iPad, certainly I'll quite regularly do some work on Figured on a tablet. The screen will respond quite easily. It just works like a normal web page, and we're optimized to do that. But I find the phone just a touch small. Yeah, not really the in-paddock tool that people might be seeking. More of that financial management thing. Hopefully that answers your question, Joe. So I'll just have a bit of a look now that we've run the variance report here. So we've got where we are versus where we've landed. On this example, I've got a couple of options ticked. So we're showing the stock quantities. So we can not only see what the variance is on a dollar amount, but whether there was variance on a stock number amount as well. Might be easier to do this one. And then one thing I really like is the show forecast remaining. So I'll turn this one on here. So in this example here, we had budgeted, we'd had 50 moved in there, which we hadn't done anything with. This is our forecast. So our variance, we were 1.3 million short in terms of income. We're 1,000 heads short in terms of sales. But then over on the right-hand side here, we've got the ability to display what percentage of the budget have we spent. So really clean indicator to come down and go, I'm a quarter of the way through the year. I've spent a quarter of my budget or 50% of my budget or 150% of my budget, and what kind of things I should keep an eye on. All of our reports in Figured have a pretty key feature, which is the ability to save the report. And then beyond that, we can add in our comments. So if we wanted to highlight something in particular, like how I sold 50 cattle with no dollar amount, so no dollar value on the sales. It's a demo farm, so all sorts of odd things can happen when people play with it, but we can add the comment in there. I can then share this report out, so I can click the share button, I can share it out via email, and people will get a copy of this screen with all of the comments aligned. Or alternatively, I can download it as a PDF, and all of my comments will appear in footnotes. Not uncommon for us to see flurry of activity post the end of the quarter, so kind of October, February, April, as the quarterly BAS is lodged, people coming in here, running a bunch of reports off, adding an enormous amount of comments in there, and then sharing that out, among family boards and farm management groups and those kind of things as well, with a heap of queries in there. So because everyone can have access to it, and we have a lot of data in there, everyone can have their visibility, and everyone can kind of add their 2 cents worth and ask about it. So pretty important little feature. So core reports is we've got our P&L, cash flow and balance sheet as you'd expect, and the variance report we've just taken you through. If we're starting to look at some of the more farm specific reports, we have our production report. So our production report will take into consideration all of the elements we've put in with our, we've got some negative quantities. Let's find where we don't. I've put in some transactions are a bit odd. There we go. So our production report will look at what our, there's a few different ways we can run it. So I can run it on cash or accrual. I can compare previous periods as well. So I can look at this year's forecast versus last year's actuals or something like that if I like. Then what we're doing is we're effectively taking P&L or the cash flow and then breaking it down by kilo production, by hectare, or by DSE as well. DSE particularly useful if you're, rather dual enterprise sheep and beef farmer. Then what we'll do as we work our way down this is we'll look at what the total production was and what the, so we'll make getting $6 on average, $6 per kilo of beef, $2,000 per hectare, $53 per stock unit, and then break down all of the expenses into those kind of key metrics. So our vet expenses were 8 cents per kilo of beef, and our fodder was 8 cents, and so on and so forth. So ensure these numbers don't necessarily add up. But right down the bottom where we get to is net profit equals, $3 per kilo of beef sold, or probably something a bit more realistic. So we can drive those numbers quite easily just by collecting a couple of extra kind of KPIs on the invoice. Another one that's commonly referred to is our tracker summary. So this, like our tracker view, is pretty self-explanatory, except down the bottom we have sales and purchase summaries, where we produce average kilos per head, dollars per kilo, and dollars per head reports as well. So good way to sense check any of your calculations, and this can be run on actuals, forecast, or a combination of the two as well. So if your forecasts are based on a price and your actuals are coming in little less detail, a little lower than that, then we can kind of identify those issues and go from there. Just a question through around the hectares. So we've got an underpinning in here, which I skipped past, which is our properties menu, which gives us the ability to add in a property. If you're a cropping producer, we do have the ability to go into paddock level detail, which some people will utilise from a cropping perspective, but you've got the ability to set the effective area of the farm in here and add properties in there as well. This is a precursor to a pretty important part of the software which we're building at the moment, which is statement of position style reporting as well. And then there's just a range of other reports just to verify things. So you can look at movements on a monthly basis. Management valuations is quite a nice report as well. So you can produce a report rather than using the kind of written down tax valuations. You can produce a report as at any point in time with a defined market value per head as well. So ability to go into another part of the software and set a market value for each individual livestock class that you are using. So that you can produce a management value for those, for bank valuations, those kind of things, over and above the, the kind of standard cost tax valuations. So pretty important little report there from time to time as well. Last thing I want to touch on is the scenarios tool, which Ben mentioned is pretty important little component when it comes to kind of the broader planning of FIGID. Scenarios gives us the ability to take the data that we already have on hand, be it actuals or forecast, and then we can build it out into these quite robust long-term annual plans. So a scenario can be anything from 1 to 10 years, only looking at annual values. So we do try and keep it a little bit simplistic, but what it allows us to do is take the understanding of where we are now, and we can build that out in some detail over and above the values we've got in zero, which are typically at kind of book or depreciated values. So instead, we've got the ability to build out the true asset position of the farm. So what's the farm? What's it worth? Current dollar amount. Again, not what we might have paid for it 20 years ago. Other assets that we've got available, so other rental properties, shares, those kind of things. We can put our cash balance in and whether we've got an overdraft available or not. Our cattle can be brought in, again, at the market value, the current quantities on hand, and we can also bring in our liabilities and with all of the underpinnings in there. So, what's our current debt? How is it structured as well? So it's a interest only or amortization table or fixed principal and stuff like that. So debt, core debt, hire purchases, those kind of things. From there, once we've got that opening position, which is a pretty important starting point for those kind of planning conversations, what a scenario will let us do is quite quickly draw out a multi-year plan. So in this example, we're going to continue to obviously have our assets. We're going to continue to repay our loans. We can enter in our income quite simplistically. So in our beef cattle here, again, we've got our opening stock on hand. We're using some automatic mechanisms to calculate births and deaths and aging. You don't have to use them. Sales and purchases can be entered in really easily. So we're just talking annual values. So it's as simple as just clicking in a cell, adding a transaction, pressing save. We're not looking to capture an enormous amount of detail in here. If you grow hay or other crops, you can also budget for them as well, just by recording what you're planting, what you're yielding, and what you're going to sell it for. Can then import in all of your expenses, again, from actuals or from forecast, and then I've spread these out over the 5 years. So grab them from year one and use the tool at the bottom to kind of spread them with a bit of a factor across the 5 years. to get a good assumption, but also have the ability to budget for leased land. Interest is going to be automatically calculating, but I can revise the interest rates if I feel. Taxation will automatically calculate as well, and then I can enter amounts for depreciation, personal and capex. Where this gets us to is,
sorry, Jimmy, this one's obviously a really good tool for, as we said, giving to the bank, showing them that you've got your finger on the pulse with any succession planning that you've got coming up, and also expansion that might allow you to do I suppose as we get there and you're about to show what if we add another farm, is that other farm going to be viable and what we can do, but also to look at what your long-term goals are going to be and how they'll be impacted on the change, so that everyone's then across the numbers and what the plans are, rather than it just being maybe in somebody's head. So.
Yeah, exactly. The bank piece is particularly important. We've found just in the absence of information, banks will be forced to put their own assumptions in. They've got access to much greater amounts of data than any of us could ever imagine. So they'll put in their kind of national or state-based averages. So certainly some of the feedback we get is if you can provide them with view into your assumptions, then they will then consider them, and possibly it's about aligning where you think you're going, where they think you're going as well. So this sense check on our summary report does that to some extent. It works our way down the list. How much land have we got? What's our stocking rate? What's our calving rate? What's our crop production or something like that, if we've got anything. And then down the bottom, a couple of key metrics that are certainly worth keeping an eye on, notably interest cover, equity percentage, debt ratio, and operating expense ratio. These are four things that a lot of banks will look at in various weights. Sometimes they'll combine the metrics and sometimes they'll have their own as well. But they are things that are being assessed. From there, with a scenario, we then produce, again, only on annual values. So we haven't considered timing of cash flows or anything like that kind of stuff. We are just thinking quite broadly, quite long term. But we have the ability to produce multi-year P&L, cash flow and balance sheet, and accompanying livestock summaries as well. Balance sheet one's a perfect example of a conversation starter. We have a lot of people that just start with this and say, by year 5, this is what my equity is going to be, or by year 5, this is where my non-current liabilities are going to be. Is it possible to reduce debt? Is it possible to have enough equity on hand for to borrow more and those kind of things as well. Our indicators down the bottom, good little sense check of the data we've entered. Profits looking good, but we've got some cash flow issues, equities improving, and principal interest cover as well. Where scenarios becomes particularly powerful is it's a broad direction setting, like I said, but once we've kind of got some agreements between the kind of management team of the farm in conjunction with advisors, we've then got the ability to create iterations of that scenario as well. So we can grab our baseline, we can very quickly do a scenario and go, what if prices went down by 10%, up by 10%, or the block of land became available? As Ben said, particularly as expansion opportunities, if we can be first to the bank with good data and transparent assumptions, then it might be us that gets to make a non-conditional offer over someone else first to kind of purchase a new opportunity or something like that. Very versatile, quite powerful, and easy to model out all those what if things, especially if you take the approach of building out the kind of the standard year in, year out plan as well. I think we've got a couple of minutes left, so I might just pause there for any questions. Like I said, we've got a few things. So we've covered off the reports, and the scenario is pretty important. Question through from Joe, with figured work with AgWorld. So AgWorld is an agronomy planning application, cloud-based, similar to us. We had a beta integration with them a couple of years ago, which got a reasonable amount of uptake. So about 100 or so users in Australia kind of tested it, a bit of a trial group. Last year, we both independently made some pretty widespread changes to application, and we're looking at redoing the integration with them at the moment to a much greater level of detail. It's an enormous piece of work. That said, like stitching two applications together is pretty substantial. So something we're working on at the moment with them. We're probably with the aim to have it in farmers' hands by the 2021 season. So kind of, by March-ish next year would be the aim. That would be stitching, applications through to figured harvests, all those kind of things, figured effectively handling the purchasing, procurement, and inventory management side of it, with AgWorld looking after the detailed agronomy plan. So very aligned companies, not just an Australian thing. We're working with them in several other markets as well. So something to keep an eye out for. But that said, we've got many users that are commonly using the app as well. Both apps, we just kind of provide a little bit of support on the best way to use them. So we're much more likely to integrate with other cloud-based apps in time. Xero being our only principal one at the moment. Joe, I might circle back to you with the grain stuff. I'm probably going to run out of time on today's session, but with the grain stuff, we don't do a lot with deliveries, but we do track inventory on hand and those kind of things as well. I just think it's worthwhile just summing back up on the what the cohesive solution looks like here. So just to stitch it all together, Xero handling, like the core accounting function, as it does very well. Figure does add on the farming element to that, with further integration partners to come down the line, i.e. AgWorld. The monthly planning and tracking is a pretty important function, and off the back of that, we have the production reporting, and commonly done in the quarterly reviews. The scenarios instead really fits in this kind of multi-year business planning and annual planning stuff. So commonly picked up tax planning work, or those kind of half-yearly reviews that you'll do with your advisory team. That's the opportunity to set things up and look at your scenario stuff. And certainly that information then feeds back into the banking world, to maintain good transparency with the banker, make sure they've got access to the information they need, not only for so they can tick their boxes, but also they can be, their advocate for you if they need to go into bat for you with, their credit and risk departments as well. I think that's about it. We'll follow up with a couple of the other queries by sending through a little bit more information. Ben, any closing remarks or questions?
No, look, Jimmy, I just want to thank you again for your input and assistance with this. I think Jimmy alluded to earlier in the presentation that those that are taking on Figured and Xero in the future, we do have some training and onboard programs which are also available, and they will be similar sessions but over a three-session period, just to show you a little bit more about how to input the data into those into the programs, whereas today was really just about showing you the functionality and what is actually available to do. As Jimmy said, it's a pretty powerful tool. It might look a little bit scary at the start with putting the data in there, but once the data is in there, I think with the live feeds coming through from Xero and getting your actuals up to date, the metrics behind your assumptions, once you've got them in there, it really is just changing a couple of numbers and it spits out the rest. So I think it's a fantastic tool, and certainly looking forward to using it in the future and working with Jimmy closely and some of our farmers. So thank you all.
Wonderful. Thank you again. We'll be in touch, no doubt. Cheers.
Thanks, Jimmy. Goodbye.